Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
What is going on? Welcome back to another video, guys. This one is ETY. As you guys can see up here, is the Advanced Tax Managed Diversified Equity Income Fund. This is another CEF, or closed-end fund. Now, some people out there absolutely hate these. Some people love these. And I think the disconnect there is you may not have that absolutely huge upside as throwing in your money in the S&P 500 or something like that, but you're going to get those regularly monthly incomes. So it really depends on what you're doing. I have like having that balance of, doing both, having some S&P 500 and things like that, but also I like my monthly income. And I don't know if you guys like it or not, but I mean, eventually that's all I'm going to live off of, and that's something that I'm proud of myself to be able to say this. We're already set up to live off that. So with that being said, this is the one that I have not actually messed with, and it was brought to my attention the other day, and I kind of just want to go over some stuff. So before we go into here, we're going to go into the holdings before we jump into breaking down things and comparisons to other things. So make sure you guys go through these, make sure you're actually looking at these. So technology, financials, consumer, clinical, healthcare, communication, industrials, consumer defense, energy, real estate, basic materials, and then utilities. Guys, make sure you know what's all going on with these. And then, this is their top 10 holdings. You're going to know most of these companies, actually. Bank of America, Apple, JP Morgan, Alphabet, also known as Google, Amazon, Easton Corp, United Health Group, most of you are going to know, Visa, so on and so forth, Microsoft, a big player in there. So we're going to go back here, and again, I don't like looking at this whole 1 year chart, mainly because in the past year, everybody knows, if you had any money in the market in the past year and a half, you've absolutely killed it. So congratulations to you guys. Let's see how well we all do over the next 10 years. So if you've done well for the past year, it's great. Don't brag about it. Just be ready for the next couple of years. Be preparing yourself. Never stop learning. That's my best advice to anybody. I've been doing this for almost 7 years now. So just remember that. You have good years, you have bad years. Some years are always better than others. So this one, ETY, you can see since inception, started at around $20 a share, basically. And then it did drop down in 08. What didn't drop down in 08? If you can answer that question, it's great for you. I don't know many stocks off the top of my head. I wasn't trading in 08, but after the collapse of the financial markets and stuff like that, because the housing market, I don't know anything that didn't drop. So if you bought in here, that's great. You did a great job here. And then holding it through, we're sitting at around $14.35. Again, if you guys ever use Seeking Alpha, it is delayed. But again, ETY, this is a closed-end fund. Now, this is a website that I've never showed people before, and it's actually called CEFConnect.com. And I think this is one that a lot of people should be looking at, because when PTY, if you guys don't know PTY, go check out that video. It's on my channel. It's a great company, or it's not a great company, it's a great fund ran by PIMCO. But this one we want to focus on ETY, and this is NAV. So NAV is basically what the fund is actually worth, and then we have a chart over here versus the price. So you can see right now we are a little bit overpriced, so this isn't one that you would know you'd want to be jumping into at this exact second, because you can, if you guys are consistently putting money into this one, let it go, let it keep doing its thing, you'll be okay with it. But we want to keep consistent growth, and you guys can see the NAV has been a little bit lower, actually, or has usually been higher. So this one would have been a great fund. So if it ever closed where it was at, you would get whatever the premium actually is worth. So right now we're trading about 3.43% higher, and I'm getting that number right here. The average is about 3.06% under what it actually is. So just kind of remember that and keep that in your mind when you're looking at these closed-end funds. You can go to CEFConnect.com and look up any fund. It's free. I don't pay for any of these. You guys know that by now. Again, this one is paid monthly. Again, you guys know I'm huge on these monthly dividend funds, guys. Huge on them. Mainly just because I want a safe place to put my money. And I'm not looking forward to pull it out anytime soon, but I want that compounding, guys. What's better than quarterly compounding? It's monthly. Believe it or not, the faster you can compound, the more money you're going to make. And the more shares you're going to hold, which means the more leverage you're going to hold, so on and so forth. So this one, again, you can go in. Yes, I downloaded this. You guys can go into there again. If you literally just Google ETY, you can get to this page. It's pretty fast. It's going to go through a bunch of stuff. Again, you can download this PDF. It gives you kind of the range. I don't think this one is updated because, again, if you look back over here, it's not exactly what we said here. So this is just a little bit out, but it's pretty close. And usually it trades under what it's saying. And you can go through and read all this. I'm not going to do that with you guys. I know a lot of people want to come in here and they want to see the nitty-gritty part of it. So this is about $14.40 a share, which is actually that's pretty cheap if you ask me. I mean, I don't know if you guys have looked at the S&P 500, but it's quite a bit. So let's go SPY, $447 just on the ETF of that, and then the actual S&P 500 index is about $4,402. So yeah, that's about right. And then ETY's actual trading right now is at 1441. It is at all-time highs here today. Again, I don't buy off of all-time highs. I'm just doing this, guys, for you. So remember, and they actually just started giving more in dividends. You can see here we got a new high on the dividends. I don't own this one, but this is one that's actually on my list right now. So when this thing dips, I want to be picking up shares, guys. When things are red, doesn't mean you shouldn't be buying them. That's probably the opportunity to buy. When things are super green, and just because you have that fear of missing out, find something that's red. That's my best advice when it comes down to actually buying into these funds, and that's how I do it. Sometimes big people who own big chunks of these closed-end funds will sell off shares, and I will instantly go in and buy more. So the big thing that I know a lot of people like, and we go over this, is this portfolio visualizer, basically. So the S&P 500, we compare everything to it because, again, Warren Buffett says, hey, where would I put my money? And he says S&P 500 every time, the ETF index. So PTY is the other one that's been a top performer. It's been super hard to outperform it, and it's just under S&P 500 right now. And then the ETY here, which is the fund that we've been talking about today. So you can see that this is a very, very close-knit race. And this is something that you really want to see from closed-end funds, because if you're matching that, that's great. Now, I'm going to show you my settings that I have on this, because these are not crazy settings. Here's your ending balances over about 10 years on this. But remember, you're doing nothing from it, and that's only going to continue to grow. So we're not doing any rebalancing. We're contributing $400 a month on a $1,000 investment. Each one of these. There's no rebalancing. I don't like the rebalance. And diversification, I mean, there's a little bit of diversification and stuff like that. The only problem with diversification is you miss out on those huge moves and those things that are like basically portfolio changers. You would have missed out on Apple if you decided to go and get rid of some tech and stuff like that. But that being said, this is actually a great trade here, it looks like. And let's go to, we like portfolio income. Again, SPY is going to be super low. That's a quarterly income. It's a lot more expensive, and you're getting basically less per share in dividends. But you're going to get more growth, of course, obviously, out of each share. But PTY and ETY, you're looking like PTY is actually going to give you more of the dividend income, but it's still really, really good. And you guys can see it's obviously just climbing right there with it, and it's a close second. You're looking at, even at the end of 2021 with $100,000, you're making $7,000. Or no, you're looking like $6,300 with PTY, and then you're also ETY, you're looking about $5,700. So that's pretty good if you ask me, when it comes down to just dividend income. And 2021's not over, so let's actually go back to 2020 when that year would have been over. You're making almost $10,000 with PTY, and you're making about we'll round up to $8,800 for ETY, which is great for you absolutely doing nothing. And again, most people's careers are longer than 10 years. So if you're able to distribute $1,000 a month, and this is where the big difference is. And for some of those, I know not everybody can do this, but this is like what I did. This is how I started. I would put $10,000, and this is what I did. I started with $10,000 in an account, and then I would do $1,000 a month. And you guys are going to be like, yeah, that's going to obviously go a whole lot faster. And yes, you're right. It allows that compounding to be dramatically higher. And you guys can see this is where you would be at with these. And let's go look at the income, because again, this is what we're investing in for, is the income. So last year you would have made just over $27,000 from just PTY by itself, doing absolutely nothing. You're collecting that check every month and you're able to go. So it means you're making a little over $2,000 a month in just that income fund. And then if you're going to go down here, so this year you're already at $17,000. It's a little over half the year over, so you're going to obviously pass that. ETY, you would have been at $23,000. Well, I'm going to say $23,500 here on this one. So again, both great closed-end funds. They're made for those retirement accounts that are going to be able to pay you dividends every single month, guys. Utilize compounding. I'm not saying put all your ducks into one basket and, let them go into one thing. But make sure you have some of these funds. Don't just be trading penny stocks. Don't just be trading futures, things like that. Think about your retirement. Quick cash never stays is the biggest thing that I've learned over the years. Yes, you can make some quick cash. What I do every single week at the end of my trading week, you guys know I do day trading, is I take my money that I have made and I instantly put it into funds like this. That way, no matter what, my dividend income is growing every single month. So with that being said, guys, thank you guys all for watching this video, and I hope this helps somebody out, and I look forward to seeing you guys in the next one.